All right. Good afternoon, guys. Thanks for joining. Let's get into this week's partnered event. Right off the bat, go ahead and type a Y in the chat if my audio is coming through. And if you're seeing this intro slide right here. Thank you, Kenton. Thank you, Bill. Thank you, Brian. All right, very cool. And guys, make sure you use that chat to ask any questions throughout the webinar, and we will get to those throughout and after the presentation. I already saw one, which is this being recorded? And the answer to that is always yes. We do record these, and we send the email recording out the following day to all your email addresses that you registered with. So keep an eye out for that. If you have to leave early, we will send the replay link out tomorrow. Okay, so let's get this thing going. I see we have a lot of regulars here. Frank, Donald, hope you guys are doing well. For those of you that are first timers, my name's Ty. I'm one of the guys here at Shark Indicators. I've been with the company for a few years now, and I just love what I do. We build real tools for everyday traders, and we bring in high quality, industry known presenters like Kris to show them in action. We've been doing this for over 6 years now in the NinjaTrader ecosystem, and we aren't going anywhere anytime soon. Here we see some words from just a few of our users. Feel free to check the others out at sharkindicators.com/testimonials. Real quick, let's take a look at the risk disclosure. Take a minute and look this over. Futures, foreign currency, and options trading contains substantial risk and is not for every investor. All right, so let's just dive into today's topic, which is focused around anchoring up with price anchor points. Now, most of you are familiar with Kris Lassen. He's co-founder and CEO of LizardTrader with Harry, aka Fat Tails, who many of you should recognize from the NinjaTrader support forum and futures.io. Kris is also an early adopter of our software, which makes him a choice presenter for events like these. That's not even scratching the surface, but I'll let him handle the rest. So at this point, I'm going to go ahead and pass it over to you, Kris.
Logo. Can you guys see the LizardTrader logo? That's what you should be seeing now.
Yep, we see your screen and we hear you loud and clear.
All right, thanks a lot. And many thanks for the introduction. Appreciate the opportunity. Always looking forward to doing these events with the Shark Indicators. It's just a great community for system trading overall. As for who we are, we're based in Berlin, Germany. It's been real cold here for the past few weeks, minus 12 degrees Celsius here today. So cold front coming in from the east, it looks like. That's me to the left here, and Harry, our market lizard, to the right. I previously ran a company that focused on sentiment analysis, applying concepts from behavioral finance before I started LizardTrader here with Harry. And that was looking at how emotions and psychology influence investment decisions. And that is part of what we'll talk about here today. But before I get ahead of myself, let's have a quick look at our disclaimer as well. Basically says that trading is associated with considerable risk, so make sure that you understand that and keep in mind that the results from the examples that I go over here today are hypothetical and not based on actual performance. It's not easy making it as a trader, and I think many of you will agree that it makes a lot of sense to have a look at how price behaves around key support resistance levels. They can be used to understand collective reasoning and psychology among market participants. So we'll start by talking about what those price levels are and why they're likely to be used for anchoring by traders like you and me. Of course, it's very helpful if we're all talking about the same thing here. So emphasis is on objective price levels that everyone can agree on. And finally, we'll look at setups around these levels, retracements back to previous support resistance, and look at how it all comes together in Bloodhound and Blackbird. So all in all, I'm aiming for about 30, 45 minutes in the presentation here today. It's getting late on my end of the world, so I'm not really going for a real lengthy webinar. So keep it short and to the point here today. All right, so first of all, what is anchoring? It's a tendency to rely heavily on the first piece of information that we get in order to make future decisions. So that is something that is really deep ingrained in us, or in our intuitive thinking system specifically. There is not really a single theory that has explained why we do it, but some of you have probably heard of Kahneman and Tversky, who did several groundbreaking studies on this in the 70s, and Kahneman later went on to publish a famous book on this called Thinking Fast and Slow. So the classic anchor in trading and investing is previous price levels. So we often hear that market commentators are talking about how the market is up from the previous lows or down from the peaks, or traders saying, I'm waiting for the market to fall back to last week's high before I go long, or I'll go short once we move back up to yesterday's low. So the bounces and pullbacks that we see around these previous high and low levels simply reflect that a critical mass of traders are positioned in these areas, which is what we see here. This is crude oil in a 15-minute chart from yesterday. We see the high, low, and close of the previous session, and clearly was enough traders with a predefined idea of what to do once these prices blew right through yesterday's close and low, and then retracing back up here. Some of you will already know where I'm going with this because these are some key areas of support and resistance that can be drawn up based on these levels, and you already see the pivot here. So that is a approach said to have originated with floor traders back in the day before we had powerful computers to run various calculations for us. So it's a simple range formula, taking the prior high, low, and close, dividing it by 3. So we have added weight to the close. And then you can use that for daily, weekly, monthly, as well as quarterly or yearly support resistance levels. So that's the main pivot in the middle of the pivot range here. We have a red pivot range, seeing that the bulls won the last session. So we have a close here near the low of yesterday. When you compare the difference in distance here from the close to the low and to the high. You see here at the regular session, we opened at yesterday's close pretty much, and then did a quick test here of the main pivot and the central pivot before we saw a pretty straight move here down to second support. And then there was a retracement back up here to the first support level, which at that point was a resistance, seeing that we were coming in from it below. And then trying to retake yesterday's low and close levels here, but rolling over towards the end of the session, continuing straight through the second support level after the regular close. So the question is, of course, why so many participants pay attention to these levels, pivot levels. And I think the first obvious answer is that they're really logical. There's even a book out there that many of you will know, The Logical Trader by Mark Fisher, which is the basis for how we created this indicator. Basically, it's all about the previous range here and the distance from the main pivot to the second support level equals yesterday's entire trading range in one direction below the pivot. So that's why it often marks the low of the day. The same goes for the second resistance level. We can't see that on this chart, obviously, but that too equals yesterday's entire trading range above the pivot. So it will often be the high of the day. And then we have the first resistance and first support levels also equaling yesterday's trading range. So really intuitive and easy to keep a track over these levels. And other than being easy to understand and calculate, it's also a question of tradition, I think. So pivot levels are widely known and accepted, and in a sense, therefore, they are just self-fulfilling prophecies because enough traders use and respect them. So another key price benchmark you'll want to pay attention to is the volume-weighted average price, or the VWAP. Think of it as a capitalist democracy on the market. It's one vote per contract, not one vote per trader, which is something that I think we all are willing to accept, that the market is driven by the large players. So it's a institutional benchmark to control execution costs. So looking at where they are executing relative to the VWAP, performance can be objectively measured with the standard deviations. So just to drive home the point here, if your job and your bonus payout is dependent on performance relative to the VWAP, I think you'd watch it fairly closely as well. And because institutional traders use the VWAP and the standard deviations as a distance measurement, we can use the same levels as dynamic and otherwise hidden support and resistance levels. So here we have a daily VWAP chart of the crude oil. All you need here is price and volume, and the calculation starts with the first transaction of the trading day, ending with the last prior to close. And so you see here it's anchored at the start of the full session, and that we have a blue staple line once the prices are moving above the VWAP, and then it turns red over here when we're trading below it. So by putting more emphasis on higher volume candles relative to the day's total, the VWAP will move more during periods of greater participation and greater importance. So it speeds up on high volume and slows down on low volume. So a dynamic way of accounting for the obvious truth that more money traded means more market impact. And then you can think of these first standard deviation bands here as a value area. So the institutional traders, they want to execute as close as possible to the VWAP. And so by knowing whether they're likely to participate in the market action, it will be easier to spot setups that are likely to see some movement. So in other words, in a downtrend like that, we're looking for a retracement and to sell when the market is coming back into the value area here. The indicator also plots VWAP levels of previous days, so yesterday's and that of 2 and 3 days ago. And that's what we saw here, a test of the VWAP from 3 days ago, and the value area low here as well. And then coming back here for support nearby the current day VWAP, moving up here again to test yesterday's VWAP, and then a decisive breakout here from the value area low here. So some of the best trading opportunities are found when prices move out of the previous value area. And just as with the pivot levels, if we're coming in from below on this, it will be resistance. And that, of course, is a cue to lock in some profits on a long position, alternatively look for a potential short setup. All right, so key support and resistance levels are benchmarks that all traders can agree and execute on. And that's the key with pivot and VWAP levels. They are the same for everyone. You can argue with the high, low, and close of the previous session, and you can also not argue with the volume-weighted average price of the contracts traded during the session. So if you're getting in on setups around key support resistance, there's no doubt as to why you're doing what you're doing. There is no subjective opinion here. It's factual, and really looking to join a critical mass of traders that are likely to respond in a coordinated way to the same price levels at the same time. And that comes down to herd mentality in its crude and basic form. And in the end, that is what technical trading is all about. So for entries, we're looking for situations when prices have crossed a key support resistance level, and then look for a retracement back to that level. So traders who got trapped short at this level will be anchored there and try to get out at break even. So we can expect demand from this position to help form support. And you want to see a decrease in volume on the retracement because low volume during a correction phase indicates that traders are not willing to close their positions. So they think the momentum of the primary trend will continue. So you should see a pickup in volume, and that's pushing price with wider ranges on the confirmation. So this is a example of this in a 5-minute chart, crude oil. We see a push above the VWAP on higher than average relative volume, hitting the VWAP of 3 days ago here, and then retracing back into yesterday's VWAP and the current VWAP on lower volume. And then there is a spike pattern on high volume again here, and then trend confirmation signaled by the zero lag oscillator. So the zero lag oscillator is a tool that we've developed to look for retracements into emerging trends, identifying setups in an uptrend when there's a short-term oversold. And so that's what we see here after the histogram values has crossed on the upside on strong momentum. We see these white bars here, and those are cutting into and testing the new trend. And those are the setups that we're looking for. And once price action shows us that buyers are taking advantage of these short-term lower prices, the zero lag oscillator generates the signal here. And the stop loss for these signals are located a few ticks below the setup bar or the signal bar, whichever has the lowest low. And as mentioned, we also use the relative volume indicator to confirm the setups and signals, but I'm not going to get into a detailed explanation of that today, as we've just featured it in our Indicator Spotlight newsletter. You can swing by my YouTube channel if you're interested. You'll find the videos on both the relative volume and the relative ranges indicators there. And yeah, looking at later here in the price action, we see a test here of the 3-day VWAP again, and coming back for support here, value area high, upper standard deviation of the VWAP before finally breaking this level here and then consolidating around the VWAP of 2 days ago, and then taking that out as well up towards the close. Okay, so here is a short scenario with the pivot levels. Again, the histogram is dropping below the 0 line, so that's a signal that we're in a short bias, looking for short setups. And at the same time, we see here that this support level, pivot support level, is breaking here. And then we see this retracement here. That's what these yellow bars are. They indicate a short-term overbought. The market here is trying to retake yesterday's low and failing at that. And so then the sellers are coming back here on the signal and taking advantage of these short-term higher prices. Again, the stop is set to the setup bar or the signal bar, whichever has the highest high. And then later on here, we see a consolidation and a pause around the second support level here, and that level breaks as well here. We have another retracement up with 2 yellow bars, and then sellers are coming back here and continuing the move all the way down to S4 here in this case. So quite a momentum on that one. So the stop is reset on this one here. And as you see, there are some quite good risk-reward multiples on these setups. You see a small loss on this one. And then if you compare the risk to the potential reward on these, it's quite good setups to have a look at. The red racing stripes that you see here come from Shark's Bloodhound Ultimate. That's a tool that allows you to specify your trading rules in an objective form and test it before you go live. So coming up here, I will just quickly go over the Bloodhound template that I've created for this and go over a management approach with Blackbird. So all the conditions that we've talked about so far are shown here as solvers, function, and logic nodes. As I said, we're looking for a break above or below key support resistance, and then a retracement back into the previous support resistance level, and then a confirmation from that move by relative volume and relative ranges. For market bias, we're also using the VWAP and the rolling VWAP slope. And I also want to see prices moving above or below the value area high or low levels or the current open. So it's very much a universal concept here that can be applied for any instrument or market that you are interested in. You will, of course, have to fine-tune it for your own purposes and align with the walk-forward process on a regular basis. And as for exits, that's where the money is made. A Shark's Blackbird tool is specifically managing the trades, and I use it to trigger actions once we move in on key support resistance levels. So if I'm up on a position 10 ticks, I will start looking to protect that profit when we're facing key support resistance. And you can do that with Blackbird by tightening the stop loss as well as the profit target. And I'm doing the same with momentum. If I see that it's slowing in the zero lag oscillator, so going against the position, which is what we saw happening here on this trade earlier today. We're up 10 ticks from around here, and then this one is moving against the position. And at that point, I'm moving in the profit target to the last ATR to try to capture as much of this move as possible with the first lot. And then a bit more room is left for the second lot, so that stop loss is pulled in to trail the last high plus a few ticks. So this got us out at a nice profit before the market turned against the position here. And there's also another condition that I really like, which is if you're in a strong momentum like this and you're moving outside the second standard deviation and you see this momentum moving against a short position here, then you would move to tighten the profit target and the stop loss even more aggressively. Because obviously second standard deviation bands is oversold, overbought levels statistically, and not very many transactions go on there. So that's a place to consider exits, especially if the momentum is fading here. As far as the statistical probabilities on this, we have a percent profitable rate of about 52% over the past few months here. Profit factor of 1.53 and a total net of just north of 9,400, a drawdown of about 2,300. This is on 137 trades. As I said, you just need to keep in mind that you have to have a work forward process in place to maintain any system. And there is more information on how to do that up on our blog, so check that out as well. Okay then, if it's all right with everyone, I'm now going to transition into the promotion that we've prepared for today. It includes the tools that we talked about, obviously, Bloodhound Ultimate, the LizardTrader Premium indicators, the session VWAP and pivots, the zero lag oscillator, and we're also throwing in the opening range, which was the topic of our previous Shark webinars. So that's in this package as well. And you also get a free membership to our indicator library for NinjaTrader 8, which is a really valuable resource with more than 80 indicators to fine-tune your trading. I've already mentioned the relative volume and relative ranges that you'll find in there, and many additional categories as well, trailing stops, trend analysis, statistical indicators, volatility indicators, you name it. And yeah, you can also sign up for a indicator spotlight there, where we feature one of our library tools once a month. All right, so everything is right here. The session indicator, zero lag oscillator, the template, Bloodhound Ultimate, and I'm also offering a one-on-one consultation for the first 5 registrants to get everything set up on your machine, taking care of the install process, workspaces, session templates, etc. And normal price for this is $2,145, and at a total price of $1,595, you get a pretty good discount on this today, about 25% off. For existing Bloodhound customers, it's a total of $995, and you do get quite a lot with this. It's a very extensive indicator suite. So in addition to the daily pivot calculations that I've shown, We also have weekly and monthly pivot levels, as well as something that we call the Jackson zones. And we also have the same for the session VWAPs, weekly, monthly, quarterly, and rolling VWAP calculations. There's a TVAP in there, and if you're trading instruments that don't have reliable volume information, Forex or cryptocurrencies, you can use the range weighted average price for approximating the VWAP. That works very well as well. So just again, keep in mind that the consulting sessions are only available for the first 5 to register, and those usually go pretty quick, so keep that in mind. All right, we have a special featuring the indicator package together with both Bloodhound and Blackbird. Or if you already have Bloodhound and you're interested in Blackbird together with our indicator package, there's a bundle for that too. That way you can get the strategy signals as well as a template for management of the trades here. Of course, the beauty of these tools is that you don't really have to be a programmer to do this. There is a learning curve involved, that's for sure, but it is the fastest and most efficient way I know of to find out whether a system idea or a trading approach has a statistical probability of success. Okay, so this is where you go to register for the promo. It's lizardtrader.com/shark webinar. And just before we sign off here today, we're not really big on testimonials, but I think it's in order to mention that I think it's about half the top downloads of all time in the futures.io forum are Harry's. Of course, futures.io is one of the main trading communities out there. Harry has been voted Programmer of the Year, and the session tools were a runner-up for Indicator of the Year as well. So I guess that speaks for itself as to how and what status these tools have in the trading community. As for the promo here, we'll have that up until the end of the week. So head on over to lizardtrader.com/shark webinar and have a look for yourself. All right, so I think I'm doing pretty good on time here. I'd like to wrap up the presentation and just have a look at your questions here and try to answer as many of them as I can. As I said, it's getting late here in Berlin, Germany. So if I don't get around to answering all of you, you can reach out to me via the contact form over at lizardtrader.com, otherwise at info@lizardtrader.com. And yeah, let's go ahead and check out the questions here. Does it work with ES? Yeah, it's not something that I have tested on the ES, but it's like I said, a pretty universal concept. The VWAP, the pivots, they don't require any particular approach. It's just the objective price levels. So of course, pivot levels are widely used in index futures. You have the difference between the regular session as well as the Globex session. So that's the old question of which pivots that you use. And then you can anchor the VWAP as well on the start of the full session or the regular session as well. Let's see, I can't really see the questions here. I think I need to undock this and make it a little bit bigger, and I can have a look. So then there's a question, does it work on NinjaTrader 8? I guess that was sort of answered towards the end of the presentation here. The indicators that were showcased here today are NinjaTrader 8 ready, so that's that's all ready to go. And if I'm taking the pit sessions, so for crude, there is a strong pit tradition, but I seem to see that this is moving towards a more global market. If any of you have been following it, it's Brent is now, it used to be a less volume on that contract than there was on crude, but now it's pretty much evened out, if not more. And so there's definitely an argument to be made that you can use full session pivots on this as well. The particular thing with our indicator is that we're using settlement prices. So you can separate the regular trading hours from the full session close, which is really important that you have that in place if you want to calculate the full session pivots as well. So Ninja does not provide VWAP indicator. Well, we have it, so you can get it from us. Can you use a typical setup using these levels and indicators? Describe a typical setup. Yeah, I guess that's what I did in the presentation here. So it's a break of key support resistance, and then a retracement back up to that level, and confirmation by price action and relative volume, relative range. So the VWAP here, Mike, can be anchored to the full session start or the regular session start. Yeah, those are the most common areas to anchor the VWAP. And if you're talking about a weekly VWAP, you would anchor it at the first day of the week. For a monthly VWAP, you would anchor it at the first day of the month, and so on and so forth. Will this only work on time charts or tick? You can also use it on Renko, but there are, you need to make some adjustments on the zero lag oscillator, obviously, because yeah, the confirmation of the price action signals will just be a little bit different. So you can make some adjustments there to make it work. But it's been tested on Renko as well, and it works on that too. The minimum prior VWAP period that you have observed. How persistent are these levels, Mike? The maximum prior VWAP period that I have looked at is, I'm guessing that you're talking about like a yearly VWAP or a quarterly VWAP, which if you're in a bigger time frame, work quite well. And so those are some levels that are obviously the max or the higher time frame periods. How many standard deviations do you typically see before reversion to the average? So the classic is also the second standard deviation. So the VWAP you can consider the so-called inside out trade or the outside in. Let's see if we can pull up the chart here again. Have a look at this. So anything from the inside out is an inside out trade. And if you're here at the second standard deviation and you're going for let's say that this is a reversal pattern, a spike, then you would take a outside in trade. Higher risk, obviously, but it's also something that you can consider. This is an oversold level. Problem is, of course, as we've seen on the other chart here, it can continue. So we're at the second standard deviation here. So, and this looks like a reversal. So risky to take trades out here. better probability to take inside-out trades. And that's what these retracements are for, the retracement signals. Previous owners of the bundle software, welcome to the latest Bloodhound Blackbird templates. It is something that we've updated the all the indicators for with no additional charge to our customers who have bought in on NinjaTrader 7. So quite a bit of work went into that. So we're not going to be giving away templates for free. It takes quite a bit of time to create them and to test them. So if you are a existing customer and you're interested in these templates, they are available for sale. Do you have NinjaTrader 7 versions? Joe, yes, we do have that. Okay, so I think that is it for the questions. If you have any more questions, drop me a line now, or like I said, you can also get in touch with me at the contact form over at lizardtrader.com, or drop me a line at info@lizardtrader.com. Be happy to hear from you. And if there are no further questions, I think I'm going to hand it back over to Ty here. I think we're closing in on 45 minutes here, so that's pretty good. I don't really enjoy those really long webinars. Try to remain respectful of people's time here, and also get to bed at a decent time myself here in Germany. So thanks a lot for checking in. I hope it's been of value for you guys, and I look forward to speaking with you soon. In the meantime, take care and bye-bye.
Awesome. Hey, thanks for taking the time to present and sticking around to answer those questions, Kris. I know it's getting late out there. For those of you who still have questions, contact Kris at info@lizardtrader.com. Any questions for us at Shark Indicators, send to support@sharkindicators.com. Anyone who tuned in late, this has been recorded, and the replay will be sent out tomorrow morning at the latest. All right, guys, so take it easy. Have a great evening. Thanks again, Kris.